Hello traders, this is Fawad Razakzada, the market analyst for City Index. Today is the 20th of May. So the FX markets remain in a largely holding pattern amid a lack of any major economic news, but the dollar is looking overall a little bit weak. Against the Japanese yen, the US dollar is looking particularly vulnerable following the formation of an inverted hammer candle, as you can see on this weekly chart of the dollar yen last week. And we've seen some further downside follow through so far in this week's session. The key level now to watch is at 145, marking the low from the previous week and an interim support and resistance level from the past. For as long as the dollar yen remains below this level, the short-term path of least resistance on the dollar yen remains to the downside. However, if we go back above 145 on a daily closing basis, I think that would put the bears in a spot of bother, and that could potentially lead to a squeeze towards the levels we reached last week. Below 145, the next key level of support on this weekly time frame is at 140, which is a significant area from the past. However, with this being a largely data void week, it remains to be seen how much further the dollar yen could fall. So it makes more sense to look at your intraday time frames to look for potential downside targets. And looking at the 4-hour chart here, you can see that I've marked the 144 level here, where the dollar yen had previously rallied from. We could see a potential bounce should we get there. Below that, we have the 61.8% Fibonacci level coming in at 143.24, which is a little bit above the 143 handle. So the area between those two levels could be the next downside target, and so on. But if we do go back above 145, I think that would be significant in that it will not only break this bearish trend line, but it will also mean that the bearish signal that we observed on the weekly time frame, i.e. this inverted hammer candle, it would kind of invalidate that and could potentially lead to a short squeeze rally heading deeper into the week. So watch out for a possible move back above 145. But as things stand, the path of least resistance is to the downside, and we are seeing a similar picture across the board, with the euro dollar looking quite interesting as well after breaking out from this continuation pattern to the upside. So far we haven't seen a significant upside follow through, which could be concerning for the bulls, but nevertheless the breakout above the trend line means that the path of least resistance, at least in the short term, is now clearly to the upside once again, following a period of consolidation. So from here, we could be heading up towards 113.80, which is the next level of resistance on this daily time frame. Above that, we have 115, which is, I think, the most significant resistance to watch on the euro dollar. Now a quick look at the Nasdaq 100 chart. You can see that the trend is still bullish on this market, but momentum is kind of waning a little bit here. The market hasn't really moved much in the last few days as it tries to consolidate the sharp gains made since markets bottomed in April. So it's possible we could see a potential dip, but for as long as these interim higher highs and higher lows remain intact, the bulls will remain in control of price action, meaning that the downside could be limited. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.